Welcome to Fast Forward on Finances, where Greg and I bring you useful information on financial matters that affect your life.
In this segment, we're looking at the topic of credit reports. You know, Julia, there are many Americans who have never seen their credit report. Let me ask you something. When was the last time you saw your credit report?
Actually, earlier this year.
Now, how'd you do that?
Well, I got it free online on annualcreditreport.com. I also could have called 877-322-8228 or sent for it at Annual Credit Report Request Service, P.O. Box 105281, Atlanta, Georgia 30348-5281. You're entitled to one free copy of your credit report from each of the three major credit bureaus each year.
They are TransUnion, Equifax, and Experian. And this is a free service.
Yes, the credit reports are free, but you have to pay to get your credit score.
Now, everyone over the age of 18 should look at their credit reports every year just to take a look at who is claiming we owe them money. But from the credit report, a credit score is generated, and that score is what is the number the lender uses to determine what rate of interest you're going to get on your loan. It may determine whether or not you even get the loan at all.
It's important to review a copy of your credit report. Not too many people know that you have the opportunity to receive a free copy of your credit report once a year from each of the three credit bureaus, Equifax, TransUnion, and Experian. It's also very important for you to pull all three. Oftentimes people pull one credit report, everything on there seems correct, so they don't bother to pull the other two. The other two could be very different. Not every creditor may report to every credit bureau, so it's important to pull all three of your credit reports.
I prefer to get the Equifax report in January, the TransUnion report in May, and the Experian report in September. That way I can monitor my credit report throughout the year.
What kind of information is on the report?
Well, basically, it focuses on my history of paying my financial obligations, whether or not I pay them on time. It's also got current balances on my debts, the amount of my available credit, public records like bankruptcies, and a list of inquiries various companies have made about my credit.
So, in a nutshell, it's got personal data, financial data, public records data, and credit inquiries.
That's right. Now, the reason this data is important is because it's used to calculate my credit score. My score is determined by my payment history, including delinquencies, and my outstanding debt balances, both in terms of dollars and the percentage of my available credit. It looks like this in a pie chart. Payment history is the biggest slice. Next is the amount of outstanding debt, followed by credit history. The types of credit in use and how much new credit you've tried to get are also factored into the score.
When starting to build a credit report and acquire new credit, it is important to keep in mind the types of debt that you're taking on to make sure that those payments are affordable. And if they are, there'll be positives on a credit report that can influence a credit score and help that credit score as the history builds on the credit report.
The bottom line is that your credit report provides a character reference.
Sounds like a pretty complete picture of your credit standing. But why do you need to know all of this?
Well, it can be useful in two ways. First, it gives me my credit score.
What's an example of a good credit score?
Well, different companies have different ways of showing it, but generally speaking, a score between 750 and 850 is excellent. Below that, 660 and 750 is good. 620 to 660 is fair, and 350 to 620 is poor.
What does that mean in real-world terms?
It can mean the difference between getting a loan, opening a credit card account, buying a new home, or financing a new car. Financial institutions use your credit score to evaluate your risk value for borrowing money. You want to get the credit you need at the best possible rates, so a good score is important.
So, if your credit score is too low, financial institutions might not want to take a chance on you.
That's right. Now, that doesn't mean everyone will interpret your credit score the same way, but your score is an important element in every decision.
You said there were two good reasons for checking your credit report.
Yes, I did. You also want to make sure the report's accurate. If there's an error in your report that hurts your credit standing, you can dispute it to get it corrected.
It's important to check your credit score and your credit report at least annually. There are things that go onto a credit report that change every month, and so if you're not keeping up on things, things can slip away. You can fall behind on your credit reporting information.
I can see why it's a good idea to check your credit report. But what can you do to maintain a good credit score?
Well, the most important thing you can do is pay your bills on time. Every bill, every month. Don't be late. After that, keep your outstanding balances low and don't take on too much credit too quickly.
This is some really valuable information. That's all our time for this segment of Fast Forward on Finances. We'll see you next time.